If you've got $2.5 million saved for retirement right now, you might think you're completely set. You might even feel a little proud of yourself, and honestly, you probably should. But what almost nobody is going to talk about is what that 2.5 million actually means and where it places you in the real retirement wealth hierarchy of 2026. Here's the uncomfortable truth. Depending on when you retire, where you live, and how you spend, 2.5 million can mean something very different to two different people. One of them could be thriving, whereas the other one is quietly running out of money. So today, I'm going to break down the 5 retirement wealth levels, and I'm going to show you exactly where $2.5 million lands you, what that number actually buys you in today's economy, and what you need to do, depending on where you fall, for next steps. So stay with me, because this one might genuinely change how you think about your retirement plan. I'm John Norberg, and I'd like to welcome you to this latest edition of The Financial Prof. Okay, so I need to set the stage for 2026 before we get into the exact levels, because the landscape has shifted substantially, even in just the last couple of years. Inflation has permanently repriced retirement life. The same retirement budget that felt comfortable in 2020 costs meaningfully more today. Healthcare costs, long-term care costs are up. Inflation is up as well. So if you're holding a lot of cash, your purchasing power has quietly been eroding. But at the same time, Social Security benefits are still paying out. However, that trust fund clock is ticking, and that inflation I mentioned a moment ago can have a meaningful difference on claiming early versus claiming late. We just released a video on this a couple of videos ago. Go take a look to see what I mean. In addition to that, interest rates have come down from their peaks, but they remain higher than those near zero days of a couple years ago. And that can create some real opportunity for retirees with capital, opportunities that didn't exist a few years ago. Oh, and by the way, the 4% rule, that old rule of thumb that says you could withdraw 4% of your portfolio per year safely, is being stress tested. Some researchers, including names like Morningstar, are saying 3.3 to 3.7% is the new 4% rule. So why does all this matter? Because $2.5 million is not a static number. It's a number that lives inside an economic reality. So let's go ahead and put that into context. All right, so the first level, finding your footing. This is if you're under 500K in savings. This is the first retirement wealth level, and it's where a lot of Americans are. So if it's you, you're not alone, and you're not out of options. If you're heading into retirement with under $500,000 saved, you are heavily reliant on Social Security most likely, and possibly a pension if you're lucky enough to have one. Now the math here does require intention. Say a $400,000 portfolio at a 4% withdrawal rate is going to give you about $16K per year. Add $25,000 in Social Security, and you're at roughly $41K per year before tax. In a low cost of living area, this can be workable, but it's going to require careful attention to every dollar. Now, if this is you, your strategy must be deliberate. Think about your Social Security claiming. Consider delaying to boost that paycheck. And also think about where you're going to live in retirement to carefully judge what that actual cost of living is going to look like. All right, so level 2, I call gaining ground. This is where $500K to $1 million. At this level, you've built something real. A $750K portfolio at a 3.7 withdrawal rate is roughly $27.7K per year. With Social Security, you might be looking at $50 to $60K in retirement income. Now, this is actually close to the median household retirement income in the US, which tells you that most people are in this range or below. You can live a genuinely good life at level 2, but you have less margin for unexpected events, medical expenses, a market downturn in your first few years of retirement, or an adult child who needs financial help can significantly shift that picture. At level 2, sequence of returns risk is your biggest concern. If the market drops 30% a year into your retirement, recovering becomes much harder. And this is where a conservative withdrawal rate in the early years, building that emergency fund as you head into retirement, are very important factors. Now, I do want to pause quick before we get into the higher tiers. If you want to know exactly where you fall, not just in theory, but based on your actual numbers, and what you can do depending on where you stand, click the link in the description. I'm going to send you a 5-minute retirement plan video personalized to the numbers that you'll fill in, and it'll give you actionable insights that you can look at and decide, is this something that I want to take action with, and perhaps even consider working with Norberg Wealth. Again, the link's in the description. Go ahead and click. All right. The third retirement wealth level, what I like to call the solid ground level. This is where you're at $1 million to $2 million. Because now we're getting somewhere. At $1.5 million, let's say, a 3.7% withdrawal rate gets you 55.5K yearly from your portfolio. Add Social Security, say 28 to 35K, depending on your earnings. You're looking at $83,000 to $90,000 or so in annual income. And that's real money. For the majority of retirees, this level represents genuine financial comfort. You can travel, you can help your kids and grandkids, you can absorb healthcare costs without totally ruining your portfolio. But, and this is important, solid ground is where people get complacent. They feel financially secure compared to their peers, but they haven't stress tested their plan. What if you live to 95? What if one spouse needs memory care for 5 years? Or what if inflation averages closer to 3.5 or 4% for the next decade? Solid ground is stable, but not unshakable. This is where some of the key strategies to combat that complacency, things like Roth conversions, things like donor advised funds or QCDs if you're charitably inclined, can really help clean up and make that retirement picture very efficient from a tax perspective as well. All right, level 4, clear skies, 2 million to 5 million. So here's where we focus today. $2.5 million in 2026 puts you solidly in the clear skies tier, the top 5 to 7% of American retirees by net worth. So let that sink in. You're not behind, you're actually significantly ahead of the vast majority of your peers. So let's run real numbers. At a conservative 3.7% withdrawal rate, $2.5 million generates 92.5K per year from your portfolio. Add in a typical Social Security benefit, call it 30K for one earner or 48K for a dual income couple, and you're looking at 122 to 140K in annual pre-tax income. After taxes, a couple in this range might take home a little over $100,000. That's over 8K per month. Now that is a genuinely excellent retirement income by any objective measure. In the clear skies tier, you can travel internationally once or twice a year, drive a nice but not extravagant car, help your children with down payments or education without feeling it, or handle an unexpected $50,000 to $100,000 long-term care event without significant panic. And in addition to that, we talked about this in the earlier tiers, you can also weather a significant market correction without necessarily needing to change your lifestyle. But here's what I want you to understand about this clear skies tier, $2.5 to $5 million. The people in this level, the danger for people at this level is lifestyle inflation and overconfidence. People with 2.5 million sometimes spend like they have 5 million plus. They upgrade too soon. They take on a second home. They fund everyone in their family's life, and slowly, without noticing it, they drift down into solid ground behavior or lower with a very solid ground margin of safety when they actually need to be more careful. Now, the other risk is asset allocation being poor. At $2.5 million, you have enough money that how it's invested matters enormously. 80% in bonds might feel safe, but it could quietly be eroding your purchasing power. Whereas that much in stocks could make sense, but we need to be cautious about risk. In the clear skies tier, the strategy is to protect what you've built, grow it thoughtfully, and build a spending plan that you could live on, even if markets disappoint 3 to 5 years. And it needs to look out more than just the next 3 to 5 years. It needs to look over the lifetime of the portfolio. All right, level 5, the summit level. This is $5 million plus. The math is essentially going to solve itself here. 3.7% on a $5 million portfolio, or even 4%, is going to get you far more than the average American. At this level, the primary concerns shift from will I run out of money to how do I build a legacy, maximize estate, and also use this wealth intentionally. We're talking about family limited partnerships, Roth conversions. Again, we talked about QCDs or donor advised funds early. The trust picture takes on a huge element, especially when you are looking at not only the while you're living, but also the when you don't need those dollars anymore picture. This is where strategy matters at least as much, if not more than any other part of this entire video, because what you do at this level can have massive impact on taxes. All right, so back to our original question. Where does $2.5 million place you? It places you at a level that most Americans will never reach. It places you in a position of genuine security if you manage it well. And there's a nuance I want to leave you with here. $2.5 million is not set it and forget it money. It's you've done the hard part, now be smart about the last mile money. The retirees that I've seen blow through 2 million plus are almost never the ones who made bad investments. The ones who never built a real distribution strategy. They took too much too soon. They didn't account for taxes on their RMDs. They didn't think about the order in which they drew down their accounts. The retirees I've seen make 2.5 million last 30 or 40 years are the ones who treated it like a business. They had a plan. They knew their number. They adjusted when life changed, and they kept their fixed expenses low enough that the portfolio got to cover the fun stuff as well. So, what do you actually do with this information? Step one is know your withdrawal rate. If you're pulling more than 4% from a $2.5 million portfolio in year one of retirement, build a plan to understand if that's sustainable and get it under control if it's not. Sequence of returns risk is very real, and the first 10 years of retirement can be the most financially consequential. Step 2. Build a tax-efficient withdrawal strategy. At $2.5 million, you likely have money in a traditional IRA or 401k, maybe a Roth account, and possibly a taxable brokerage. The order in which you pull those dollars from these accounts can save you tens of thousands over the coming decade. Talk to a CPA or a financial planner like myself about this, or better yet, loop in both. It's very worth your time. Now, step 3, think about guaranteed income. Social Security is really nice, but in the clear skies tier, you might consider whether a small allocation into something else beyond just the average stocks and bond portfolio might make sense. We can talk a little bit about what that looks like if you do reach out. Step 4, revisit your asset allocation. In 2026, you have options you didn't have 4 years ago. High-quality short-duration bonds or treasury ladders or dividend-focused equities get a lot of play in the news headlines, and certainly they can potentially make up the part of a good portfolio. But the key here is understanding what's most important to you and building a plan that involves the right investments inside that plan that are going to get you to where you want to be. But here's the bottom line. In 2026, $2.5 million places you firmly in the clear skies tier. You are not behind, you are genuinely well positioned, but this tier rewards people who stay intentional, and it can punish people who just decide to coast. So if you haven't already, click the link in the description. And again, I'd love to send you that free, personalized 5-minute retirement plan video with your numbers, your timeline, and again, insights that you can take action on should you choose to do so from that short video. And it's completely free. No cost, no hidden gotchas. Just click the link and give us a few basic pieces of information and we'll send the video right to your inbox. I'd love it if you would go ahead and like this video, subscribe for more if you enjoy this content, and I look forward to seeing you out there in the meantime.